Hello friends, this week we will understand two very important concepts. One is what is benchmark in investing, and number two, what is alpha. Benchmark means some index against which the performance of a portfolio is compared periodically. For example, say you have a portfolio of 10 large cap stocks. Now, how do you compare performance of your portfolio against any benchmark, against something? You have to choose a benchmark, and that benchmark is to be chosen rationally. Therefore, since your portfolio comprises totally of large cap stocks, you should ideally select a large cap index like Nifty 50 or Sensex 30 as your benchmark against which to compare your performance periodically. Now, suppose at the end of year 1, at the end of the first year, the benchmark generates a return of 10%. Suppose your benchmark is Nifty 50 and it has generated a return of 10%, whereas your portfolio has generated a return of 12%. This 2% excess return over and above the return of the Nifty is called alpha. Alpha in this case is positive because 2% is over and above the benchmark returns. But if your portfolio underperforms vis-a-vis Nifty in the same period and generates say a return of 8% against the 10% return generated by Nifty, then in this case you have a negative alpha of 2%. So alpha could be positive, alpha could be negative. Positive alpha is real alpha, and higher the alpha, better the fund manager's performance. Alpha is also called fund manager's performance because assuming that you do nothing, still there is a very high probability that you would have generated 10% return because the market has given 10% return. Now, since you have made necessary changes and your allocation to individual stocks is different from the index, that has resulted into 2% extra return. Therefore, this 2% extra return is attributed to the fund manager. That is why it is also called, alpha is also called the fund manager's performance. As far as mutual fund industry is concerned, SEBI has mandated to choose the benchmarks in a certain way. Like for large cap funds, you have to choose index which comprises totally of the large cap stocks like Nifty 50 or BSE 100, BSE 30 or BSE 50 like that. Similarly, for mid cap stocks, you can choose, the fund manager can choose Nifty mid cap index or BSE mid cap index. Similarly, for the small cap funds, a small cap index is to be chosen as the benchmark. Here it is extremely important to understand that the benchmark is to be chosen at the very inception of the fund itself. It is a fundamental attribute of the fund. Therefore, if the benchmark is to be changed at any point of time in future, there is a set of procedure which is mandatory to be followed by the asset management company or the mutual funds, without following which the benchmark cannot be changed. I hope that the concept of benchmark and the alpha is now clear to you. Thanks, friend. Just let me know if you liked this video. Thank you.